Hey traders, Jeff Wild here from the Day Traders Academy. What I want to do is give you a quick kind of a 10-minute overview of what hit and run trading is. So let's jump right to it. So basically, now more than ever, if you look at charts over the last year to 2 years, you'll notice that they're getting way more choppy. Okay, they're definitely way more chaotic. They have a lot more kind of consolidation, all right? So you'll notice that they don't trend a lot. It might happen like 85% of the time they're kind of chopping back and forth or consolidating, and 15% of the time they'll trend. Now, one of the challenges is that you often don't know that you're in a real trend until somewhat late to the game. Okay, so that's something to consider. Now, one thing I want you to think about is that the majority of traders use a trend following strategy. I mean, there's hundreds of trend following strategies, but most traders are taught with the simple principle of the trend is your friend. Now, don't get me wrong. Trend trading has its place, okay? When you do have strong, powerful trends, then there's no better strategy. But the reality is in 2019 that the markets aren't trending a lot. And as I'm going to show you in a few minutes, they're getting more choppy than ever. And so basically, if you're not prepared to deal with these particular market conditions, you're going to be really struggling. Okay, so, and I want you to consider one last thing here. It's a known fact, according to brokers, 90% of traders lose their money in the first year. And most traders trade like with a trend trading strategy. So it kind of tells you that what they're doing is not the right thing nowadays. So let's move on. So if you look at this chart here, this goes back in like 2007-8, and it talks about the average trading range. In other words, the highest to the lowest point of the day. If you measure it, that's the total range or the amount of distance or the amount of pips that the market moved that day. So if you look at from in the euro US dollar, just 1 year, it went from 84 pips range a day to 177. Okay, now I believe this graph was taken in the later part of 2008, 2009, but look at this. Massive increase, all right? It's almost tripled from 2007 to this area. Just check some of these out here. Once again, the pound, US dollar, from 132 to 394. Okay, let's look at something like the Swiss. That doesn't move a lot compared to some pairs, but 86 to 185. It's more than doubled. Look at the Australian dollar, US dollar, 90 to 298. That's tripled. Okay. Look at some pairs like the pound yen, 638 pips a day. All right. Now I want you to think about this a minute. When you have really big ranges, like say 600 pips a day, 464, it's not hard to grab 50, 100 pips a day. You should be able to do that in your sleep because the volatility allows you to ride the trade for a long time. So even if you're just a decent trader, you should be able to make 50, 100 pips a day without trying. It's just like back in the late 1990s in the stock market when we had that runaway crazy stock market. Okay, you could buy anything at any time and it would go up. I remember where stocks would double every 2 weeks. You would just think they were printing free money, and for a long time it was that easy. Okay, but things have obviously changed. Now let's move on. This is the new trading reality. And once again, this deals with the fact that things are much more choppy. This, in the first quarter of 2019, are the daily ranges. They're minuscule compared to what I showed you on that last chart in about 2009. And you can always pause this video to kind of let this sink in and to give you some graphs here, some popular pairs. You can see here, like over the last few months, look at how it's really drying up on the pound US dollar. Okay, You can have weeks where it's below 100. It can drop down to 50. All right, way down. Okay. USD CAD. Okay, look at how it's just drying up. The ranges can start to be like 80 pips, 60 pips, 50 pips. US dollar Swiss, once again, you can see it's dramatically dried up from 80 pips here in January, December, okay, 18 here. Well, this is actually back in 17, but you can see going down, down, down. To show you a few more real quick. Euro USD, all right. Look at how now 80 has become the new norm here, even less at times. And you will see, though, like when you get near the end of the year and into like January 1, things do dry up temporarily. Okay, everybody's on break. Look at the USD JPY. All right. And one last one, the Aussie, the Australian US dollar. So why is this so important? Well, this little graph here would represent more of that price activity, let's say back in 2007, 2008, where when the market started running, okay, let's say it runs 300 pips one way, 200 and so forth. These are good runs. Now please keep in mind that the markets just don't run 200 pips in one direction or 180 down. They're going to zigzag intraday, but this is just to give you the kind of the big idea here. So you can see that some big runs up. So how hard is it? Let's say you're doing your technical analysis and you decide that you know, the market looks like it's going to bounce here. All right, we're not going to get any technical things now, but you think the market's going higher. Well, even if you got in late up in this area here, it would not be hard to grab 50 pips, 60, 70 pips. Okay, and that would be a very good day. So you'd have to be really bad if you couldn't grab 40, 50, 60, 70, 80 pips because the momentum is in your favor. Now, of course, you might get a lot more if you run a trailing stop. Okay, but my point I'm trying to make is even if you just grab a piece of this, you're still going to do very well. It's like it's hard not to. Okay, but let's look at the exact same chart, but we're going to reflect more of the daily ranges that we're dealing with. Now, once again, keep in mind, it's just not going to run 70 pips. It's going to zigzag if you're looking at like a 5-15 minute chart. So if you're trying to grab a piece of this, all of a sudden you're kind of fighting for scraps. In other words, let's say if the market runs from bottom to top at 60 pips, remember, you're never going to pick the exact bottom. You're never going to sell at the exact top. So if you're good, you're going to grab 40, 50% of this, which is only about 30 pips, all right? So same thing here. If you're really good and you grab half of this, that's 20 pips. So all of a sudden, you're going to be fighting a lot more just to kind of make some money. And then, as I mentioned, I'm going to pull up some real charts in a minute. The fact that the markets really zigzag a lot makes it even harder than I'm pointing out here. So let's actually, I'm just going to pause this video for 1 second and then I'm going to switch back to some real charts. Okay, so what we're looking at here is a Euro US dollar, a very popular pair. It's a 1 hour chart and I'm on the MT4 platform. And what I have here, the yellow lines, it's what's called a Zig Zag Indicator, and it plots out the swings in the market. In other words, it goes from a swing high to a swing low, okay? So what you'll notice is that just in this one little, you know, this is from April 1, okay, to the current day here, April 12th. But there's no real trend. Okay, it you know, it goes up, comes down. Just when you think maybe it's going to go up, it goes down. All right, maybe you start thinking you're making new swing highs, and then, you know, you might decide I'm going to go long here because it's a pullback, and then it drops. And then just when you think maybe that's over with, maybe this was a double top here, it goes up. Now it forms like a triple top, 1, 2, 3 here. And you think, oh, maybe it's over, but then it goes up. All right. Now, of course, if we pull up a bigger, like let's say a 4-hour chart to cut out some of the noise. Well, actually, let me do this here for you real quick. Let's just plot this out so we can see the exact periods that we're looking at here. Let me do this. Let's go from the absolute low there. Once again, notice how choppy this was from the swing low to the swing high. Okay, and keep in mind, if you're down here, you have no idea it's going to go down. And think about it. If you saw this price action here, you're probably thinking we might be into a downtrend, okay? So once again, on a 60-minute chart, you can see that, you know, zigzagging up and down, a lot of chaos. Even if I go to a 4-hour chart, let me open this up. There's still a lot of zigzagging, kind of make you wonder what the heck is going on. Now, if you were to go to a daily chart, in hindsight, of course, it looks easy because you're thinking, let me just get this correct for you. You're kind of thinking, oh, market went down, double bottom, right, and it goes up. But that's hindsight, all right? So let's go back to the 1-hour chart. And I want to, let me just find this real quick for you guys. Let me just, you can see here like zigzags right here. Now this is the kind of thing where if we're looking at hindsight, and this is the thing about trading, hindsight, it always seems easy. You can say, oh, look, it went up, 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 right? But if you look there in real time, would you ever thought that you could start to go long? Okay. You wouldn't know this is going to happen. You might have thought this point here was just a pullback to the downside. Okay. And then all of a sudden, you know, it goes up and you think it's going to keep going without any warning, it goes down. I mean, look at this price activity, right? This is an hour chart. How are you supposed to trade this? Okay, just when you think you know which direction it's going to go, it sells off, then it goes up, then it goes down. Okay, you look at how much it's zigzagging. The thing you have to consider is, let's say you got into a trade for some reason in this area. You might think, okay, going great, but when you start having to sit through all these whipsaw for hours, even a couple days, you're not going to know what to do. You're going to not know when to get out. You're going to get very nervous. There's no easy way to handle that, okay? Now, let's just take a quick peek on another pair here. This is the pound yen. This is a daily chart, and you can see how even on a daily chart, yes, in hindsight, there's big moves down. But you wouldn't know that's a trend, you know, back here. You know, because it's basically been kind of in this trading range. Okay, kind of swing high, swing low, swing high, swing low, swing high, swing low. You don't really know. And let's kind of put this here. I just want to show you these periods here on a 4-hour chart. So you can see what kind of a mess is just before this big kind of down move, right? Would you really know to go think it's going to die out? If you saw this big surge up and then this pullback here, you'd probably be thinking, oh, great, I think there's going to be another leg up. Okay, and think about it here. Look at how it zigs. You kind of went sideways for a long time. This is a 4-hour chart, so this is days and days, right? Probably a couple weeks. Finally broke down. And just when you're thinking, great, I see a downtrend, it skyrockets up. Okay, skyrocket up about 800 pips almost. Then when it's kind of going down here, You're thinking maybe it might settle down. You wouldn't think it's going to go down, okay? But it does. So you can see that you can pull up any chart if you use a Zig Zag Indicator, that there's a lot of bouncing around. Let's do one thing real quick here. This is let's see, a 30-minute chart. Okay, just before the market started to run up on the 9th of April, you wouldn't have thought about going long here probably, because the market's making new lows after this run down. But say for some reason you decided that you thought you're going to give it a shot to the upside. Well, it starts to go up and all of a sudden it sells off pretty hard real quick. Now what do? You get nervous. Maybe you hang in there. It goes up. All of a sudden it starts to sell off real quick. And it's gyrating. So there's so many little whipsaws that it's very hard to trade this, to let alone know when to get in, when to get out. So let me switch back a minute to my other screen. Well, actually, before I switch the screens, so basically what the hit and run trader is, it's looking to capitalize on all this, I'm going to call it junk, okay, all this chaos in the market, because this is very hard if you're just following trend trading, as I mentioned earlier in the video. So what we want to do is learn to recognize amongst all this mess where the big institutional traders might buy and sell. And we also have to use different strategy that allow us to kind of take a piece out of these moves. We're not looking for the home run trades, to use a baseball analogy. We want to be hitting singles and doubles over and over again. So what that means is we're looking 20, 30, 40 pips. We're going to take the money and run. And that's why I call it hit and run trades. We want to get in and out, in and out, in and out, versus hoping that we're going to get the big, 500 pip or 1,000 pip trade. Now, keep in mind, if the market really starts to open up momentum, we might catch some bigger trades, but you have to switch gears when you've got this kind of, all this kind of mess happening, all right? So let me just switch charts here real quick. So as I mentioned, the goal of hit and run trading in this workshop that I'm going to be sharing is, it's going to help you to find smaller trades over and over again. Now, keep in mind, we're not talking about 5 pips or something like that. Yes, if you want to scalp, I'll show you how to do that during the workshop. But it's that sweet spot. If the market's only running 60 pips a day in a range in a particular pair, we're not trying to, we can't crush it. So we want to take a small piece out of that over and over again. So if once again, if you've been trading for a while, you may feel this way. It's just such a mess on the chart. You really don't know what to do. And, you can keep trying to figure things out by yourself. You can go on internet forums. You can buy like an ebook here, ebook there, whatever, try some software, stuff like that. But you're still going to be struggling if you're trying to just piece a lot of crap together from the internet. So basically, this is my goal for the workshop. So I don't know you personally or your experience level, but let's say you're a newer trader and you're starting down here where you're not making money. You might be on this side where actually you're losing money, but here's the whole idea. This is like break even down here. And my goal is to get you to 100 pips a day. Now, of course, I can't guarantee it, but you have to have goals in everything you do in life. All right. So basically what happens is when you're new to trading, or maybe you just haven't been able to find a system that works for you, you're going to be very uncertain what to do and when to do it. You're probably going to lack a strategy that you really feel good about. Because of all this, you're going to have low confidence in your system. You're going to have low confidence in your ability as a trader. And this is going to create a lot of fear, okay? And when you're in this cycle, it's easy to stay here. You just can't get out. In other words, you can't get to the first goalpost, which is here, to say make 20, 25 pips a day. So my one purpose in this is I want to take strategies that I've developed over the last 20 plus years, all right, and I want to give you tools, and I want to give you a blueprint so I can move you through these goals over time. All right, and I think you could agree if you could start to make 50 pips a day, things get really a lot more fun and a lot more interesting. And through the workshop, I'm going to give you tips to help you fine-tune what you're doing. Now, of course, this is not going to work if you don't put in practice and you don't trade. You know, you've got to put in your time. This is not like baking a cake where I could tell you, okay, go buy these 10 ingredients and stick something in the oven for, you know, half an hour or whatever. It's not like that. Trading takes time, and depending on your experience level, it's going to depend how long it takes. But I think you'll agree with me that if I can start getting you from one goalpost to the other, you know, you're going to be doing good. And as you start moving this way, you're going to find much more consistency in what you're doing, and you're going to be much more confident. It's going to keep building so that you can get at that 50, 60, 70, 80 pips a day or more. So that's it. I wanted to keep this brief, but you know, I really hope you'll join me on the upcoming event. If you have any questions at all, just please email me, and I look forward to meeting you.